Hey, it's Mac with PriceActionTradingSystem.com, and it's Monday. It's March 27th. This will be our chart listing for the day. And just taking a quick glance at the daily chart, you can see it was kind of a neutral type day. So when we flip over to the 2000 tick chart, you'll see a very similar type day, basically a range day. I mean, we traded up, we traded down, and we opened and closed somewhere in the middle. So very sideways kind of neutral day. We're just really kind of stuck on the upper side of the EMA in that first band on the envelope there. So with the EMA holding, we go higher. We'll have to see, but um, today's just, you can see we're kind of just chopping sideways here. We did move up off these lows where we were chopping sideways. We're still just, the market's very neutral. And it seemed like there was a lot less volume today, certainly a lot less movement and volatility. So we'll see what comes tomorrow, but kind of a slow sideways day today. But let's flip over to that 2000 tick chart, take a look at it, go through the trades, and we'll wrap this day up. Okay, here's our 2000 tick chart, and you can clearly see we had a trend up, a trend down, and another trend that that didn't quite go as high as the previous ones, and then we traded down after that. So we have opened this movement over here's the new trading day. So we did close off the lows, but certainly nothing spectacular. We closed on the lower end of the range, or the lower side of the range. I shouldn't say the lower end because that would be here, but we closed on the lower side of the midline of the range. And most of our trades were to the downside. We were trending. This is mostly sideways to here, and then we got a couple of legs up. But you just didn't get a lot of long setups here into that into the 2:30 hour. So, but let's zoom in, go through the trades, and we'll wrap this day up. All right, 7 o'clock kind of came just as we're making this correction back to the EMA, and rather than bouncing off there, we just kind of chop sideways. We do have this correction with a break and a new low, so maybe take this new long. It's just it's a first entry because we did make a new high here, and this is, you could treat this like a failed breakout. This is close to being blue, but you probably should wait on a higher low, and we really never get one. We do have a breakout up here, but very neutral signal bar. I don't think you want to go short there. And then we break out the low side. And we finally get a, here's another one. We get the close outside. It's not a real convincing one. And then a new low. There's clearly two legs down, and that's a second entry. I didn't mark it. It's one you might take. It's a little aggressive. Wait and see if you get a higher low here. And as long as you got room back to the EMA, take that trade. It's a little congested, but we clearly made a leg up and then came back, and we couldn't even make a lower low there, and we closed almost on this high. So I like going long there. That turned out to be a pretty nice trade, and that's one of the better moves of the day, actually. So you would have probably got a runner on this. Of course, we run up. I don't think we quite made a new high. I think we made a double top there. Let me double check that. I can't remember if we made a new high or not. Yeah, we did make a new high by one tick. So, yeah, there is a new high in there. No real setup to go short. There's this bar is an inside bar, and so this is really your signal bar. It doesn't make matching highs or anything. And of course, you get two legs down, a second entry long, and it turns down right off the EMA. And you would be looking for another move down off this low. So I like going short right there. There's plenty of room down here to these last couple of lows. You get a second entry and a lower high here, but the signal bar is not any good. It ends up being a fairly decent move, but notice you got a break and now a couple of legs down to a new low, and then you're working up. Break, new high, no signal bar. Another move up. Again, signal bar is not very good. You get a lower high here. It's right at we bounce right at the midline, so there's a good chance we might go lower. here, but it could come back to the trend line. It's moved a little bit far to call that a lower high, but I still think it's still a second entry, so I think you still think you could take it as a second entry. Just make sure you have room to get out before that low right there. This one you might be concerned with, but this is going to be the most important one. It made the last lower new low. And this turns out to be another pretty good move here, actually. It runs down, bounces off the lower side. It looks like we're going to go higher. You get two legs up, but no short there, really. And then we're just kind of working sideways until we turn back up. And we get a break here, and you get a big bearish bar. Notice that's a first entry, and so that's a second entry. That is a 2-bar matching high, so you can use this for a signal bar. A lot of times what I like to do, since the second entry really triggered here, maybe you let it break lower and drop a limit order a tick or two back, or maybe one tick below that, and see if he comes back and fills you before it goes lower. That way you actually enter where the second entry is, or a little higher than where this bar is anyway. If you get too conservative, you'll miss the best trade, so you got to be careful with that, but it's something to think about. So you could just go short one tick below that bar. And of course it runs on down. I don't see, there's a second entry here, but not a good enough signal bar. We come back, still no setup. You might look at that as a triple test, but still no setup, so you can't take it. And then of course you get a trend up. Close outside, tries to make a new high, can't make it. And finally, you tried to come up once, twice, and then 3 times. This is kind of a tough triple test because there's not really any space in there, so it feels more like just a short off those highs after multiple tries with a little one tick break higher that fails. But yeah, you may still take that trade. It's a very bearish bar, and we tried to go higher multiple times there, and you got that little bit of trap. You may even take that on the engulfing bar, but I'd probably wait for this to close and make sure it's pretty stout. And then as you see, there's some support across there too, so it's just not a great trade. I marked it green, but it's not. It's a little bit aggressive. So anyway, we bounce down here at the lows, close to the overnight lows. We don't quite get there, but you're more sideways than anything, but you're still working higher here, and you get a close outside, a move to a new high, and then it breaks higher here and reverses. That's a pretty bearish bar. So again, maybe you go short right there. It's 2 legs up, so you could get a whole nother leg down like this one, and we're still not to the overnight lows. It would have been good for a short scalp, but then it bounces and it's going the other way. No chance to get on the other way. But it runs up, gets close outside, new high. So that's and look at that big, this one breaks higher and turns down. Again, it's right where we had that previous resistance. Very bearish bar, still a little ways away from the EMA, and that's a second entry short, so I'm going to take that one. I really thought we'd come back to the lows again. It ends up getting down there, or actually it ends up, we got a little bit of a trend line working up here. But it ends up coming back down, and I can't remember what we just talked. I moved it over, and I can't remember if we were talking about this trade. I think we were talking about this trade. It's second entry short, and of course we get the close outside. That's mostly sideways, but again, it's still working up there. Close outside, 2 legs to a new high, so that's another second entry short. Right at that same resistance. You could call that a triple test too. 1, 2, 3. So I like that trade. That's the one I was really hoping would come on down. So we must have been talking about that trade. I apologize, but I just kind of lost my train of thought there. It's also a failed break out of the sideways stuff, because that's sideways. Even though you're kind of trending up, that's still sideways. And it does bounce down here. I don't think you want to go long there because you don't really have a new low yet. My trend line's moved a little bit here. you would just set your trend line here. It's not confirmed or anything until it touches again. So even though that is a second entry and you're a little bit away from the EMA, I think it's a little risky. You might argue for it to be green if you want to be a little aggressive, but I think that's a shot in the dark. It turns out to be a great move, but it's just there's nothing that tells you prices are going to go higher right here. Prices are really just kind of non-directional across this whole thing here, and you don't really have your trend channel here going, the blue one going up yet. So it's kind of hard to know what prices are doing here. Maybe after you set these two swings, you kind of notice these midlines are working out here, and they kind of continue to work out here. There's another second entry here, but that's just too sideways. But it fails on the breakout, and you got a hidden second entry there. But I like that short just on a failure with two legs up, and pretty nice signal bar way away from the EMA. There's a lower high here, but you're really kind of back in this trading range, and it's probably more like that right there. So I don't think you can go short right there. And of course now it comes down here, it kind of confirms that trend line. There's a second entry right here, but you get an inside bar before it really triggers. Actually, the second entry triggers here, and then you get a break and new low. So this is like a third entry. So scratch that if I said second. This is like a third entry. And I don't really like this one because it looks very congested there. You are a little ways away from the MA. It is off the key entry point. But really, I thought you should take off here. When you didn't take off here, there's a chance it could be going to go lower. So we came up short up here. I mean, it was hard to know where the upper trend line was. I think it's here in the end because that's where we end up going again. But this is just hard to kind of know there. So I think it was a little risky. And of course, you get another second entry right here. Notice it runs up first entry and it runs up again. Second entry after a break. I didn't mark that one. That's another one you could at least argue to be green. It's way away from the EMA, but that's a fairly strong move right there. And so I was a little hesitant just to take it on a second entry. I'll mark it green all the same, but I think you're better off to kind of wait. And you can see it does go higher. You would have gotten out of that trade, but it does go higher. I just don't think it's worth the risk. So, of course, we break out here, and your signal bar is no good there. You get a big bearish bar, but it's not really a setup bar. And then even if it was, you couldn't go short way down here. And what we end up doing here is I think this turns out to be a midline, and there's really might even be more like that right there. So there's really a channel here, or I'm sorry, a range here. We do have the breakout, and then we're just kind of bouncing along. I like this one just because it's definitely a triple test, and it is a second entry short, and then you get a lower high here. I marked it green. It's after 2:30, but it's like, where's the time there? 2:32. So it's only like a minute or two. So you might could still take that trade if you didn't enter here. It turns out to be a pretty good move, but I marked it. So, and again, I like that one just because it's a triple test and a second entry short. And you can see the little channel coming up, close outside, new high, and then you get basically a lower high here. So that's kind of how I saw. Not a lot of trades today. Not a lot of volume. Not a very kind of neutral type day with no sense of direction. I mean, there's some trends here that last a little bit, but even the trends are, even this is really sideways until we made these last two legs up. So really kind of a choppy day. This first trend up and second one down had a little bit of a momentum to them, but other than that, this was really choppy and sideways. So you could trade this both ways, all the way up, as long as it's swinging back and forth above and below the EMA there. And I've had a couple of people recently contact me and say, you know, why are you marking a trade? It was like this right here, it's above the EMA, but clearly, hopefully you can see we're in a downtrend here. And prices will get above the EMA in a downtrend. So you can't just make a rule that says, hey, if the setup's above the EMA in a downtrend, I'm not taking it. And if the setup's below the EMA in an uptrend, I'm not taking it. That's not a good rule, because it's even in a strong downtrend, you're going to push slightly above the EMA occasionally. And so the trend line here is the real key, not the EMA. The EMA is clearly pointing down, so that's a downtrend. Here the EMA finally starts to point up, and that's an uptrend. But in this case, you can still see we're clearly above and below the EMA consistently till about right here. So you could still trade this both ways. Here I'd probably only be looking for shorts, because this is consistently down, and here's one consistently up. And the first time you get below the EMA is here, so you probably can still get a good setup. So you can't go with that rule. So just make sure you understand that. The idea behind the EMA is just to, if most of your price action is below the EMA like here, you're in a downtrend. If most of your price action is above the EMA like here, you're in an uptrend. If you're swinging back and forth above and below, you're probably, this is mostly sideways. It does turn out to be going up, and then you finally get a pretty strong move, and you're mostly above the EMA there. So you might be careful shorting this, but we've been going higher and still swinging back and forth, and we still did that here. So just remember that you can't just say because the prices are in above the EMA you can't go short, or because they're below the EMA you can't go long. If you do that, you're going to just shoot yourself in the foot. So if you aren't sure when you can go long and short, then you just don't have the experience yet, and you need to keep working at it and sim trading. I mean, that's why we sim trade, to get the experience and to prove to ourselves it works and that we understand it and that we're understanding enough that we're consistently profitable. Don't try to learn this stuff trading live. Too many people do that, and they all become failures, and then they run out of money before they ever get a chance to really learn. Back when I first started, we had the paper trade. We'd order our charts and study them, and the charts would be 2 weeks old before we ever even got them. 2 weeks, 2 months old sometimes before we ever even get. I think back to how archaic it was and what we had to work with, and when I think about today, when you can sim trade live data, and you don't even, it's just like trading live, other than you don't use real money. I mean, that's as close to real trading as you could ever get, and people won't take advantage of it. Or they will for a short period of time, then they feel like they're spinning their wheels. Don't be afraid to sim trade. You need it. You need that experience. You need to prove yourself that the strategy works. You need to prove to yourself that you understand the strategy and that you can trade the strategy profitably. You don't want to be trying to do that trading live, because you're just going to be a donator. Because even if you do understand the strategy, and even if you do learn it, there's still, when you go live, there's that psychological aspect of trading with real money, and you got to get past that too. So at some point you do have to try to trade live. So the next step after sim trading, in my opinion, is go to the MES. No, you're not going to get rich trading the MES, but guess what? You're not going to lose a ton of money either, unless you're just horrible and not ready. Even then, you shouldn't lose too much money. So your second step logically should be the MES, to try to kind of get that feel for actually having some skin in the game and not blowing all your trading capital while you learn. And once you can consistently do it there, then jump over to the ES. So this is not a get rich quick scheme. If you come into this thinking you're going to get rich quick as a trader, you're just setting yourself up for failure. Don't do it. Don't be afraid to sim trade. Don't feel like you're spinning your wheels sim trading. If you knew how many times I've heard that, I just cringe when people say, "No, I'm not going to sim trade. I'm just spinning my wheels." Well, be hard-headed, but guess what? You're going to be broke. You're trading against professional traders that are skilled and have been doing this for years, and they're hard to beat. And this is a zero-sum game, so make sure you understand that. For every dollar you make, somebody has to lose $1. And the skilled traders do not lose very often. Good traders, yeah, they're going to lose more often, but they're going to win more often too. But skilled traders, they're hard to beat. They don't lose much. And when they do, it's very little, and then they're flip flopping and they're going the other way. So don't think you can come in here and read a book or read a manual, practice for a few weeks or a few months, and then go live and make money, because it's not that easy. It's just not that easy. It's not that difficult, but it's a skill that takes time and effort. And just like any skill, I mean, if you want to learn the piano, you might even have an ear for music. You might be very talented in musically talented, but it doesn't mean you're going to be playing live and getting paid for people to come hear you play in a short period of time. It takes those people years to be good enough to play in places that make a lot of money. You're not going to Carnegie Hall as a piano player after you've been playing for 6 months or a year. It's going to take you years, most likely. Even if you could play right now, doesn't mean you're going to Carnegie Hall and play. And just so, even if you can trade right now and read this chart, doesn't mean you're going to get on here and trade against professionals and be profitable right away, because your mind is going to mess with you, and you're going to make mistakes, and you're going to screw up, and you got to work through all that. But anyway, I didn't mean to get on that soapbox today, but it needs to be said occasionally, and so I felt like it was something made me say it was time to say it again. But I'm going to wrap it up. We'll be back again to do it tomorrow. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.